All right, Gerald, let's go take a look. We've had, we pointed out two V bottoms now. Two V bottoms. We had two liquidity grab trades so far. Let's take a look at them. So what we do is we have our dual trend filter that keeps our mind right. The uptrend started last night. You can see our dual trend filter. Here's our outer zone has been green. Our inner dots have been green all the way up. So if you noticed on the way up, these are V bottoms. These are yellow trigger entry V bottoms. And after a yellow trigger entry V bottom, we're looking for what's called liquidity grabs, where the market has a distortion in price. You get a pullback in price, where they're trying to pull the market back against the overall trend filter, and then resume trend so we can get a continuation pattern to the upside. So after these V bottoms, after 8 o'clock, 7 o'clock, let's start right here. We've had our first V bottom with the dual trend filter, green, green. We only want to buy, no sells. That's how a lot of traders get trapped in the market. They use all these different indicators that tell them to fade the market, whether you're looking at divergence, moving averages, MAC, Fibonacci levels, pivot levels, all these different reasons why they should short the market, and that's how they get trapped. Well, we're a little bit different. What we like to do is we like to buy high, sell higher, short low, buy lower. We want to go with the trend of the overall market and where the counter trend traders are getting stopped out. So these pullbacks, when these counters enter the market on these pullbacks, we're actually looking to buy long or buy with the overall trend of the market. So that's a pullback. That's a pullback. Here's a recent pullback. You can see if you look in the chat room at 8:55. I posted that we're looking for LG on deck after this one right here, before this one even came up, and it's been running 80, 60, 18 and 3/4, been as high as 26, working on 10 S&P points, and I posted that in the room before that even fired off the yellow trigger entry. So these are V bottoms, right? These are V bottoms with the overall dual trend filter. Now, what we're doing is we can use our automated strategy, which my favorite is LG2. All your members have LG2. After this V bottom comes up, you can simply toggle your strategy on to get you long the first liquidity grab after a V bottom. So here's a liquidity grab entry there. It will be here, and I'll show you the strategy in a second, and it'll be here. So once I posted 8:55 LG on deck, that told you you can turn on the LG trader. So here's the LG trader entry. The entry was 60.1850. 60.1850 plus or minus a few ticks. Some of you got slippage. Some of you got this within a tick or so, plus or minus a few ticks. But you'll notice the LG trader, after the V bottoms, you can turn on the LG trader to get the trend with the overall trend scope. Now, what you don't want to do is you don't want to leave this on to take the counter moves, meaning you don't want to let it take the counter moves. So after you get your targets off, the LG trader, if you don't have an MA selected to avoid these counter moves, you just want to, after your targets are hit, turn it off, wait for the next V bottom, turn it back on with a simple click under the control panel, and then it can fire off, it can fire in these setups like it did this morning. So in other words, you don't want to take any of these shorts on the way up. If the dual trend filter is indicating that we are going higher, if the dual trend filter is indicating we're going higher, which it has since yesterday, then you want to turn it on after the yellow trigger here, Yellow trigger here, 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 here. So since 8 o'clock this morning, or 7 o'clock this morning, we had an LG1 here, or LG2 fire, an LG2 fire. More importantly, we teach traders to start logging in around 7:45 a.m. Eastern to 11 o'clock. That's the best time to look for these LG trades. And then you can turn it on the LG trader, LG2 trader, because the LG2 trader, what it does, there's two strategies we give traders. There's LG2, LG1, LG2. What LG2 does, it takes the first liquidity grab buy after a V top or V bottom. So we're in an uptrend. This is a V bottom. There's your V bottom. What happens is you can toggle on your strategy to automatically get you in. It'll keep your stop in. Now on this particular setup, this is a 1/120 chart in our trade room. I have a 16 tick hard stop, 16 tick hard stop. So you want to stick with the 5-to-1 risk to reward parameter. You don't want to go more than that. You don't want to risk more than that. So on your first target, you can't have any less than 4 ticks on your first target. If you increase your stop, you can increase your targets. You must increase, if you increase your stop, you must increase your target 1. The rule of thumb we have in the room, you don't want to go more than 5-to-1. All right, so depending on the targets that you want to get, you don't want to exceed that as a rule of thumb. If you trade a lot of prop firm money where you're trying to pass evaluations, or you do have pass an evaluation account, they're going to make sure that you stick into that 5-to-1 risk to reward ratio. So you can do the same thing with this strategy. Once it V bottoms, which it did, you can turn it on. You can see where the liquidity grab happened. This is what I posted in the room. Right there, you can see it on the bottom, 855, 855, LG on deck. What does that mean? LG on deck. So at 855, we started getting a big liquidity grab. Actually, it just V bottom, right? So we start getting this big liquidity grab, this big tail. It's where the smart money pulled the market back. They're pulling the market back against trend, against our trend filter. They're taking the counter trend traders out of the market to get these buy order blocks, these lower levels, only to resume trend. And once it resumes trend and closes, our liquidity grab trader 2, which takes the first liquidity grab after a V bottom. So there's your V bottom. There's your V bottom. Here's your big liquidity grab, this big tail or wick. That's your LG liquidity grab. And here's where our LG2 takes the first liquidity grab after it closes. It will get long immediately, and it'll hold your stop in. This is a 16 tick stop. And then it proceeds to hit its targets. Same thing happened on the first one this morning after that nice V bottom. So with our software, if you took any shorts with our software, using our software, you're totally going against the software. If you took any shorts all session, it's been nothing but buy-side setups. This is where traders can get themselves in trouble, trying to catch pivot levels, trying to sell Fibonacci levels, trying to catch tops, because where the order flow comes in, of where these counter trend traders get stopped out, is their resting buy stops are going to be just above these swing highs. So we're betting that the counter trend traders are short the market, and once they get through those highs, you'll actually see our Momos fire, our yellow triggers fire here. When these yellow momos fire at this level, we should already be, when these highs are being broken and the counter trend trader stops are getting taken out, we should be getting our targets off selling when the public is getting stopped out. When the counters are getting stopped out, we're actually getting our target ones off. That's why I call this a self-generating trade. It's all based upon order flow of the wrongly positioned traders. We prey on the wrongly positioned traders because they keep trying to counter trend trade the market. All these indicators you get with all these trading platforms, they're designed for us to lose. Why? Because they're all against trend. Pivot levels, Fibonacci levels, the MAC, divergence, oscillators, they're all rolling over. This oscillator is, we use the oscillators differently. A lot of traders that read books or other rooms, educational rooms, they'll see this and think the market's overbought. They see divergence, they'll try to short that market. Here's a great example of divergence. So if you're taught by a lot of different books out there, you should short that market right here. Why? Because that's a higher high. It's a higher high and a lower high on oscillator. So a lot of the books out there on trading say short this high. Well, look what the market does. It has a minor pullback against our trend filter. That's exactly what you don't want to do. You don't want to do that. You want to wait for the pullback, wait for the yellow trigger, let the strategy pull you in with a continuation with trade. But this is just an example how a lot of indicators steer you wrong. Divergence. A lot of traders would short that high. Or maybe a Fibonacci level comes up, and this is a huge Fibonacci level. It happens all the time at pivot levels. Let's say this is a pivot level. They're trying to short a pivot level at this level. And they fade the market again, only to be stopped out. Faded the market, only to be stopped out. So when the market finally breaks these highs, if you look across and it breaks this high, my momentum trigger fires here. Check this out. That's when my yellow trigger fired right when it broke through this high. Right there. That's when we're getting out of our initial positions. Look where this high was broken here. All the resting stops will be above that high where the counter trend traders and the counter algos are getting stopped out. So when this resting high got broke also, your resting stop orders are just above that. It's a self-generating trade. Look where my Momo fires. When my first Momo fires, we're getting out of liquidity grab 1 and the V bottom. We're selling and recovering right there at the first Momo. So when I said LG is on deck, that's a leading indicator. It's not a lagging indicator. When I said LG, look in the room right there, 855, post in the room. I even said it on the microphone. We're looking for buys only, not looking for any shorts. You get the yellow trigger. You can toggle the strategy on, LG2 strategy on, let it manage the position. Entry, stop, exit. Right there it is. We've had 2 back-to-back runners this morning on the LG2 trader. Now what's the market trying to do? What's the market trying to do? It's trying to pull back again, right? We're trying to pull back again. So what are we going to do? We're going to wait for the first. You're going to wait for the first V bottom again. Green candle up. You simply can toggle this off. Wait for the first green candle up. So when this first green candle toggled up, you turn liquidity grab trader on. When this first green candle came up, you turn the liquidity grab trader on, LG2. It can manage your stop. You can manage your entry, your stop, and your exit. And then what the LG trader will do, it will look for the first liquidity grab. This one, it waited for the first liquidity grab to get long. This one waited for the first liquidity grab to get long. This one right now, we're looking for a pullback in price. That's a counter's getting stopped out here. That's a counter. Rolling position traders getting stopped out there. Now the counter trend traders, once again, if we get a V bottom, they're going to get stopped out again. They're trying to pull back price again, only to resume price. Why? Because our trend filter is saying we are going higher. We have been going higher since yesterday. There's been absolutely zero sells in this market, none. We've had no indication to short this market, not once. My PDF goes in great detail on how to do this. Great detail. Getting the trend right is half the battle. If you can get the trend right and not counter or fade the market, you're halfway there. Because you're not fading the overall trend direction. Now, if we turn green-red, where this trend filter is opposite of trend, then you need to lay off the V bottoms and V tops. But right now, there's no reason to do that. What we established this morning in the room at 8:15 this morning, I got in the room and I marked these up. I said, here's our first target, 17. The market was all the way down here at 8 o'clock. The market was down at 6,000. 6,000. The market was at 6,000. Our first target was 07.5. Our next target that I marked up was 17. Our next gap fill, I said our next gap fill, we'll look for the first. I posted in the room at 8:55. I said our next target is on the microphone and posted in the room, 60.28. That's our next target. And this is when we were at 60.17. Sure enough, we got a liquidity grab, hit our target, right to my market profile. Now what will we do? If we break through this gap again, I said my ultimate target, this gap fill of 43. You'll let it get through this gap, look for the first retracement, turn the liquidity grab trader on, and then you'll have your target up here at 43. So you can use market profile that looks at all the trading participants out in the entire market. It looks at all the algorithms, all the prop firms, all the hedge funds, all the banks. Looks at everybody. And we can determine, based upon previous market profiles, where our targets are on these liquidity grabs. So once we get a liquidity grab, we knew this target when we entered at 18.5. We knew the target already. We knew the target was 28. We knew that that's a magnet. We posted that at 8:15 in the morning. I posted this magnet target. So when you enter at 8:39, you know the target. It's a magnet. That's our market profile magnet right there. Where to go to? Right to the magnet. So you have a way to not only get into the liquidity grab trader, we know the targets. We knew the target of 17 right there. On this entry right here also. On this V bottom, if you took the V bottom, you know your target is right there. If you took this V bottom and liquidity grab, you know your target is right there. Now, if we break through this high, right? Now here, these counter trend trades over here, you don't take these turn liquidity grab trader off because we've been in an uptrend, right? You don't need to take those. That's why you want to turn it off after your target's hit. You only want to take liquidity grab trader with trend. So you can turn it off, and you're going to wait till what? You're going to wait for the next one. Since our target's hit, wait till we break through. And what's our next target? What's our next gap fill? Our next gap fill is 43. So we know the next liquidity grab, especially if we break through this level, if we get this liquidity, if we get a V bottom that breaks through this level like it did here, we know our next target on the run is going to be 43. So now I will not only know my V bottom target, I'll know my liquidity grab target. Right? So you can enter two ways now. You can enter off of the V bottom with trend. There's your V bottom. Nothing but buys, no sells this morning. Nothing but buys. There's a V bottom. There's our V bottom on our charts. So these are V bottoms, and then after the V bottom, what occurs? After the V bottom, we're looking for what? We are looking for after the V bottom, we're looking for the first liquidity grab for the strategy to enter. What's our target? The next gap fill. We know our targets right before we start trading for the entire trading day. I know all my targets on the S&P based on my gap fills. There's your V bottom. Here's your LG2 entry, liquidity grab 2 entry. That's the automated strategy. LG2 entry. You can provide your own stops. We have a 16 tick stop on this one. Here's your LG2 entry right afterwards. Also LG2 entry, okay? So that is how you can use a system. There's not a lot of setups in the trade room. You're just going to look for the dual trend filter to find the trend. That's half the battle. And after the dual trend filter finds a trend, you're going to look for a V bottom, V top. That's it. And then you use the automated strategy. You can use the automated strategy to fire in the trade. Now, look what just happened. What's happening right now? We got a V bottom with trend. Here's your V bottom. So what are we looking for? We're looking for the gap fill to be filled. What's our target? Our target's all the way up to 43. And also what we're looking for is we're looking for what? We're looking for the market to provide us a liquidity grab entry. So what the market has to do, it has to pull back, which it did. See how it pulled back? Now target 1's off, target 2's off, target 3's off. Now target 3's off, right? Our runner, target 4's off. Our runner, we're looking for 60.43 on this run. We still got a nice lot of upside. So you can see the process on how this works. This is a trade I was calling out again. This is a leading indicator, not lagging. There's your V bottom. Turn on the liquidity grab trader. This is very, very simple. Let the algorithm and let the strategy do the work for you guys. The trend filter gets you halfway there already. Market profile gives us our targets. That's all the trading participants in the market. And then here's our LG getting in the trade. Our ultimate gap that we'll look for another V bottom will be 43 target. Here's our LG2 entry.